Well, a lot of you folks may already thinking, what's the worst could happen? It's just a notice. Come on, what's the worst scenario of receiving a CP2000? It seems harmless, right? Even give you the option to disagree or agree, right? It seems harmless. So, worst case scenario. So, for example, a lot of people just made this mistake. It's a very big mistake. Big mistake number one is to just ignore the notice, okay? Because as I said, this notice do have a time limit. Normally it's 30 days. And they're expecting you to use these 30 days to respond properly, okay? And if you don't, you know what? IRS just assume you agree with everything. With the proposed change, they were going to propose a change, and it is noticed. And then, you know what? Even if they are wrong, you're still going to, they just assume that you agree with everything. You know what? You just got automatically get assessed for extra tax if they're wrong, right? You got extra tax, you got interest, right? And this interest will backdate it to original due dates. That's a lot. And of course, penalties. Most of the time it's like 20% like accuracy related penalty. That's a lot. So if you just ignore it, this problem won't go away, and this harmless little notice problem will become a bigger problem. So always treat this really carefully. You need to reply. Mistake number one. And of course, mistake number two is you don't pay or you can't pay, right? It seems, reasonable, if I don't have this money, right? I just, I don't pay it, right? Or, I'm broke, I can't pay it, right? Most of the time, the IRS will then send you a formal bill, right? Usually it's like a CP 3219A, right? So basically it's like a statutory notice, right, for the deficiency, because you're paying less than the expected, so there is a deficiency. And they are going to give you a statutory notice, okay? So this notice is not just a notice, okay? They actually have a result. So for example, they can't get money. They may, levies on your bank account. Ooh. And they may, if you got like wages, they will garnish the wages. Ooh. Less money, right? And then your credit reports, we have to keep a credit report nowadays. Then you get a, noticeable mark on it. So your credit report will get like, not so clean slate. Yeah, so maybe affects your credit score. You could lose eligibility for, say, payment plans. Okay? So, you know what? They're still going to get it through the bank account, through the wages and all that, but you got your credit report or, payment plans and all this eligibility maybe got affected. So, that's not something that you want to do. Okay? And what about say, hey, I disagree? Yeah, they do give a notice for you to disagree. They give you an option, you can do that. But just the telling, say, hey, IRS, I disagree with this. That's not enough, because they got proof, right? They got proof because they got like the other party, your bank or credit unions, all sort of the third party actually stand it, and they say, oh, this just doesn't add up, okay? So they got the data, they got the proof. Hopefully they are correct. Sometimes they are wrong, but you know what? That's the reason that they send you the notice, so you can disagree. But disagree alone, by choosing disagree, is not enough. Come on, think about it. You need to send the proof as well, okay? And most of the time, you're going to attach a clear document to prove your cases. And sometimes you're going to attach the prior correspondent, so they got the context. So now, oh, this like a previous this thing. You explain this, and you send the proof. Oh, they will understand. So my recommendation is that, like, you going to send them a corrected 1099. Okay, if that's the case, 1099, you can correct it, and then you're going to write explanations of why this is a correct version, and then you can attach the previous correspondent so they can immediately know the context, rather than just send it like a corrected form and just throw away, right? Say, I disagree. You can't do that. You are going to prepare. Even better, you're going to use the professional help to help you write the 1099 and corrected and professional explanations that actually add up and make sense and convince the IRS, oh, they made a mistake. Okay, you are correct. And then, of course, you can select the private correspondent, and this is very important because they're like handling like astronomical amount of data. So you got to give them a little bit context so they they're happy, right? They just got they don't need to like search the data and all that, just to make the folks at IRS just life a little bit easier. Okay, so you know what? You disagree, but you need to send proof. And of course, sometimes this is the worst case scenario for a lot of clients is, you know what, if you repeatedly get like CP2000, right? Just come on, think about it. Repeated discrepancy of what you report and what the data that they got, they starting to get a little bit suspicious. Okay, maybe this is not a mistake that you are making, but maybe it's a mistake. If you actively choose to do this in the wrong way, that's your mistake as well. But they're not like, oh, maybe it's not a mathematical mistake that I'm making. Maybe there's something fishy going on here. So you know what? I am going to give you a compliance review. I'm going to, sometimes if they find something wrong, maybe a civil penalty assessment. I'm going to assess it. Maybe it's enough for a civil penalty. You don't want that. Okay? So basically, if you repeatedly receive the CP2000s, your audit risk increase. Okay? Because you can't go wrong every time. Okay? And of course, this is the first thing, if you repeatedly receive the CP2000s. And of course, sometimes if the mismatch is just too much, okay? Like for example, reported income will get like a 100K plus US dollars of reported income. Come on, that just doesn't make sense. That does not you missing something, right? It's like you intentionally trying to hide things, and they gotta prove that you're hiding. So you know what? The IRS may flag you, right? Say, hey, this we want to audit. Okay? So yeah, you don't want that, because they will increase the risk of audits, and audits will result a lot of things that need to be done. So I want you folks to continue to do your work, right? Continue to go on with your life, right? Focus on your everyday life, focus on your dreams and all that. You don't want to go through audits, even though it's a good for the country, but you don't want to go through that. Okay? And if you're talking about the worst case scenario, that's tax evasion, because maybe in some rare cases they think, well, through the audits or through whatever, and they think, well, this is definitely something, maybe a criminal activity going on here. There is a thing called criminal referral, right? So if they think this is a tax evasion, well, in really rare cases, they will refer. You don't want to be treated like a criminal, right? So you know what? You have to treat this with extreme caution. Like I said at the very beginning, every correspondent from the IRS should be treated carefully. Okay, hope that clarified the CP2000. All right.